It's the start to another wild week in the markets. Things are calm so far, but with inflation data coming out Wednesday and Thursday, that will not last long. We're going to dive into what's going on in the markets, what we're expecting this week, and more. Before we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are not financial advisors. We're a couple of guys who love following the markets, playing around in them, trying to set ourselves up for success long term. So do your own research before you do any buys or sells. Kevin, it's Monday. TradFi markets are as boring as can be. Everything is just flat across the board for the most part. That's not too surprising considering that, this has been such a data-driven market. We haven't really seen quarterly reports doing a whole lot. It's all what is happening with inflation, what's the Fed going to do next, and we're not going to know that until Wednesday. So how are you looking at things right now? What did you start your week off with?
Yeah, I mean, it's been a pretty boring start to the week. We saw nice gains on Friday for TradFi, but I was expecting maybe more of a sell-off going into it. Again, I'm in the belief that I'm just selling all the rallies, more so in crypto, and we see that crypto obviously took a pretty good dump down to down. I think Bitcoin's down like $1,000 or so today, but it's absolutely insane to think that the market is It's almost like indecisive. Like sometimes the market will move on data, sometimes it won't. We saw the unemployment number absolutely skyrocket Friday's gains for TradFi. We saw Bitcoin, all the meme coins just shoot up, and today we're seeing sideways trading in TradFi. We're seeing negative price action in crypto, and the market's just really not sure when it decides it wants to move. And I think a lot of these moves are either, people have already priced in these situations, but I also think that there's a lot of people who are just, being overconfident in some of these assessments that they're pricing in these events. So is the market pricing in, what CPI, PPI are in? Now, obviously, they're going to take this data and then they'll probably price it in going into the next FOMC. But for right now, I think no one's really sure. That's why our Friday show was called Uncertainty. Obviously, it wasn't
Yep.
uncertain Friday. The fucking shit went straight up. But I think now people are just like, okay, we just rallied. Now what? And I think that's a big question for a lot of investors right now. Now what? Because we are getting closer to the summer. Volumes are down, and we are hitting some pretty important resistance. So we'll see.
For sure. GM, Mr. House, appreciate you being here with us
Thank
as
you for being here.
always. There's not a whole lot going on between now and Wednesday. It's a light week as far as earnings go. We have Berkshire Hathaway today, Airbnb tomorrow, Disney on Wednesday. When I was looking through it, those were the three ones that stuck out to me. But we don't have any huge days like a few weeks ago where it was like 4 or 5 giant tech companies all reporting on the same day. So it's going to be calm from that standpoint. Wednesday, we have CPI and core PPI or core CPI. That is what, is going to move the needle next as far as rates go. Thursday, we have PPI and core PPI, so producer price index. So giving us a better view on inflation. We've started to see movement in the direction of another rate hike. It's not being priced in yet, but we're seeing the probability of it start to move. After the last Fed meeting, we saw that it was a chance for a rate decrease, bigger chance for a pause. Now the probabilities are showing no chance for a rate decrease, about 83% chance for a pause, 17% chance for a 25 basis point hike. I'm of the belief we have we got inflation readings this week. We got PCE at the end of the month. I believe there's going to be another CPI print and PPI print before the June Fed meeting. So there's a lot more data to come out. I think we're going to see it like back in January at the February meeting, where gradually we started seeing more and more rate hikes getting priced in. I think we're going to see it again. I don't think the Fed is done yet. There's just too many issues still going on. Inflation is still going to be out of control. I think we're going to get a not great number on Wednesday. So there's a lot of uncertainty right now, which provides an opportunity like we talk about all the time.
Yeah, definitely. And again, even if we do get a pretty good number, or a neutral number with that CPI print and the PPI print, who's not to say that's going to be revised in a month? This shit keeps getting revised, and people are acting more so on the initial number and not necessarily on the true number, which we get when the revision comes out, because everyone likes that. We wait for the date. We're waiting for Wednesday. We're waiting for Thursday. I don't know, man. It seems like the market's just being a little stupid right now. And when we see that, even if they raise the rates or they, say they pause, you and I were talking about this. How catastrophic is it still to have rates at 5.5 to 5.25%? Like it's, we're just, sustaining this longer, even if they do hold it side, don't raise rates. I think they're gonna, most likely. I think that this print's probably going to be a little bit more negative. And even going back to some of the earnings, like we saw a lot of earnings that didn't come back necessarily negative, right? We saw a lot of that with tech. We saw that with Apple. We saw that with a bunch of again, a lot of tech companies seem to actually do pretty well, especially if they're doing like AI based, products that they're, beginning to unveil to start production on. And maybe that's just because the market itself is doing pretty well. And that gives people some confidence like, okay, maybe, maybe we could afford to spend, maybe we could afford to buy into the market. I don't necessarily think that Q2 is going to be that same way. And again, if we start to see some of this data come back, and then, one high CPI print, that's probably going to hurt most companies, right? Because then they're going to definitely raise 25%. Then it's going to be harder to borrow. And we saw tons of, I still don't think we're out of this banking crisis. So it's really insane where we are right now. And the market is just so complacent. And, I keep saying it, a complacent market is a very dangerous market. And that's when people are, not worried where their money is. They actually believe that they're in a safe position. You are never in a safe position when you're in a bear market. You have to always understand that. Again, even in a bull market, you're never in a safe position. Anything could absolutely happen at any point, whether it's TradFi and all your money's in a bank, or if you're in crypto and you find out that, guess what? Now you can't move any of your coins off the exchange. Like anything could happen at any point. And when people Ace, this is exactly what they're doing. It's
we both clicked at the same time. Yeah, I agree. We've said over and over again, custody your money, and it's a really dangerous time because people want a bull market to be
absolutely
here. Like they desperately want it. If you're in crypto, you've seen it with the meme coin run that we've been on, and that is absolutely dying right now. You see the influencers who want to, get people to put more money in the markets. We talked about this a bit, I believe, on Friday, where I'm so opposed to so many of these, big crypto accounts saying that we're on the verge of a bull run. It's time to go risk on. And we got more data after our show Friday to support my belief with the consumer credit report, because boy, howdy, is that not looking good. There is so much debt out there right now. And that's why, like, I also see a lot of people like, well, why does it matter what the Fed's doing with interest rates? Like, how does that affect me? Well, when they've been raising interest rates for 10 straight meetings and you're carrying a credit card balance, and each time the Fed raises the funds rate, your credit card interest rate goes up, then it definitely impacts you. And we have seen an obscene amount of debt continue to grow month over month, year over year. And that is one of the main reasons why we're not going to be exiting this bear market anytime soon. I don't know what it's going to take for people to like become fiscally responsible and start to pay down their debt. As inflation goes down, and hopefully people put more of that, that difference in income into paying off their debts. But I don't know. Like that would be me expecting people to do the rational thing, and making that assumption is a very big mistake a lot of times.
Absolutely. And again, there's like recessions aren't, generated by one individual person or one individual group. It's a culmination of everyone just being extremely irresponsible, from the banks to the borrowers to people who are just trying to like pay off their mortgage and stuff like that. People are just irresponsible with funds at the wrong time. And it just builds up to a point where, eventually it's going to pop because, quoting The Big Short, in the entire history of the world, fraud has never, what was it? You can never get away with fraud. It always fails, right? And you can lie to yourself. You can, lie to the public as much as you want. It's going to pop at some point. It did in 2008, did in 2000. It's done so the entire history of the United States every time we've seen a recession or a depression. And at this time right now, I think we're on the cusp of, that realization. I think the consumer credit, like the debt limit is not the debt limit, but consumer debt, plus even, the debt ceiling coming up too. There's just a point where we are, it's insane. We're going to be crossing $1 trillion for consumer debt. And, That's a pretty big market cap. We're only about halfway to Apple at that point. But I'm just kidding there. But it's insane to think that this is not going to affect you. And again, we're not even seeing the full effect of all the rates that have been raised so far. It's a lagging effect that the rates when they get hiked. So we might be seeing some of the effects of those 50s and 75s that maybe we saw in like September, but we haven't seen anything that's been raised since October. Maybe it really depends. And if we continue adding, this is going to play out for another 6, 7 months, 8 months. We're going to start seeing the effects of it. So I don't know, man. This just seems like a negative place, and that data that we got Friday after the show, I don't know. I don't know why the market rallied 600 points, 500 points that day, but if it did, I hope that they didn't use a credit card to buy some stocks.
Yeah, just one of the biggest mistakes and every generation makes it, right? To some extent, it's buying a house to try to keep up with people. These days, millennials or the Zoomers, they can't buy a house, so it's going on trips or trying to keep up with what they're seeing their friends doing on TikTok or Instagram. It's like, God, not to sound like a crusty old guy, but for the love of God, do what is best for your financial well-being so that long run you're not in a position where a lot of the other people who are constantly in debt, living paycheck to paycheck, like try to actually accumulate wealth by working and staying within a budget. Like it just doesn't happen anymore, and it really needs to, and it's a shitty situation to be in.
Oh, absolutely. And again, I honestly don't believe the unemployment rate is correct. I think that will be corrected in the coming months. I think that we're probably a little bit higher than we're being projected when we first saw that data report. But honestly, people that are getting hurt the most are the people who have those liabilities. That they bought a
Yep.
house at the wrong time. They have debt from from loans from college. They have auto loans that they're being late on. They're going to eventually default. It's a really bad time to be a young kid that overspent, because even for companies, they overhired and they overpaid a lot of kids because they went to school, and now you're at a point where you have tons of these kids because you have a ton of money and you could pay all these people this much credit. It's going to be hard to borrow money. Banks are going under. You're going to have to cut losses, and then if you cut losses, it's going to most likely be young kids that enter the job market a little bit later than others, and then those kids are probably renters. They're probably have liabilities. It's an absolute snowball effect. Like, I can't imagine there being a place where you're not affected by what's going on 6 to 7 months from now. Like, absolutely going to get destroyed. I hate to say it, but anyone with liabilities, it's a terrible place to be right now.
Especially because there's going to be so many opportunities to deploy money into assets that can produce a lot for you in the years ahead. We haven't really seen a market this bad since, 07, 08. And most people who are in the markets these days weren't around back then, whether, they were just too young, weren't aware of it, or they weren't as active in the stock market, in the crypto market, because crypto wasn't even a thing back then. But a lot of people just aren't really sure how to handle a bear market, what to look for. And as our attention span, as as a society gets shorter and shorter, the ability to have a long-term perspective becomes more challenging for more people, but also becomes a bigger competitive advantage for those who can keep it, right? Because the best investments I ever made, I started buying stocks back in 2008, the summer of 2008, which was just great timing on my part. But some of the best buys I ever made were ones that I had to, like, it was many years before they played out, like many years. Nvidia is my biggest holding to this day, and I purchased it back in 2012 for like $13 a share, and we were in a rough market for it. It was years before I started to see a good return on that, like 5 years plus. I didn't sell any of it until November of 21. Like, so I waited damn near a decade before I actually sold any shares of it. And that's what you kind of need right now, is like you have to take a long-term view on things. You cannot buy something and hope that in 3 months, 6 months, 12 months, it's going to like double or triple, because that's not realistic in the stock market, especially in this kind of market. Have we seen it with shit like Tesla and Meta over the last 6 months? Yes, but those were outliers. Okay. And you had to get those right at the bottom. So what we're going to do, not today, but later this week, is we're going to kind of look at some up and coming, whether it's crypto tokens or stock picks that we believe, over the next 3 to 6 years could see a really nice run up. I think there's a lot of emerging industries, emerging markets that have potential there. And this is a good time as the market remains to kind of, over frothy, and we're just totally data dependent, to try to do some research and spend some time looking into what are, businesses that have a higher multiple. I mentioned last week, like it's tough to see something like an Amazon, a Meta, Nvidia, even Alphabet, like have these huge multiples in the future. Like they're very safe. Like they're good places to kind of park money if you want to have it in the market. But long term, if you have a longer time horizon, you can take some more risks, and that's where finding some of these lesser known companies can give you a huge leg up. Okay, so that's what we're gonna be looking at a little bit later this week as well. So just kind of give everybody a heads up on what to expect for all the shows on Money Never Sleeps this week.
Yeah, absolutely. And again, I think one of the most important things too, if you're going to have that mindset, because I think you always have to think macro. I think the macro is probably the easiest way to gauge where the market's going to go. Maybe you have to play the long game. It sucks, I know, right? Everyone wants to make money super fast. I mean, sure, I would like to make money super fast, but I know that it doesn't last when it happens that way. The most important thing that you have to remember is don't be married to your assets. These things are tools, right? Obviously, we need to make money. You want freedom. You want, financial independence, stuff like that. Everything's a tool. Like you'll see Bitcoin Max, you'll just say, hey, buy from 69K all the way down to 8K, 12K, right? The Michael Saylors of the world. What are you doing? You have to make sure that you're protecting yourself, protecting your wealth. At the end of the day, this Bitcoin is not going to save your life, but it can definitely improve it if you know how to use it the right way. If you're just buying because you hope that you're going to get rich and it's going to go up, can't guarantee that's going to happen. I mean, if it was the truth, everyone would be rich, right? Everyone would be playing this game, but we can see that the adoption still for Bitcoin is pretty low. And even though there's a lot of money in the market, there isn't a lot of money in the market for everyone. There's just too many people who have larger positions that play this market a lot smarter than others. So again, just don't get married to your assets. There's definitely opportunities. And, I'm bullish on a lot of stuff long-term, but short term, if we're looking at the Pepes of the world, the only reason Pepe pumped on Friday last week because it was Cinco de Mayo. It's probably the only reason I could say that it was the pump, Cinco de Mayo pump. But no, it's just absolutely insane to think that money comes that fast. You have to be diligent, you have to be patient, and you have to be consistent with where your position is going to be, and be okay with holding a loss at some point.
And you have to be okay with ignoring the occasional person who does hit a 100x, because for every 100x they hit, there are probably a lot of other ones that went to zero, and most people are not sharing their L's, or only sharing their W's. So do not get fooled by people out there who want you to believe that it's possible for anyone to hit the jackpot. Like, if you got a little bit of extra cash that you want to throw into some of these tokens, whatever, do what you want to do. I just think that thinking that you're realistically going to hit a 100x, a 1000x on any of these things is, in a very short amount of time, is crazy. It's absolutely crazy. Could you hit a 20 or 50x long term in some of these things? Absolutely. But once again, you have to have that longer time horizon and be prepared to sit through some shit in order to get there.
Definitely.
Much like my kid after he eats a bean and cheese quesadilla, you got to be ready to sit through some shit if you want to really, get to the finish line.
I can go over some quesadillas right now. I haven't eaten lunch. You cut out the shit part, but that sounds pretty good. I can go over some Mexican food right now.
Okay, we got about 5 minutes left, Kev. Are there any charts you want to look at? Anything worthwhile? I know you wanted to touch on Binance as well, because there has been some shenanigans going on with Binance. So let's wrap the show up with that.
Yeah, Binance is full of shit. No, I'm just kidding. I really don't know what's going on with Binance, man. Again, I saw the negative funding rates we were seeing with BNB. Like, it was insane, like 22 times the normal amount. That was 2-3 weeks ago, and it lasted for a long time. Like, I was actually getting fucked on a short position because it was like every few hours I was dropping like $200 in funding rate just to keep my position open. So eventually I was just kept on closing the position, reopening, taking a little bit of profit and using whatever profit to hold the position open. So it's kind of like had some trailer park trading right there, but had to do it to keep the position open. Totally cool. Sometimes you got to do it. You got to get down and dirty. Take the capital gain of $8 just to make sure you don't pay the bad funding rate. But it was doing some great. Fucking ice is going crazy now. I know.
Work through it.
All right.
Just be louder than the ice machine.
Yeah, I'll just pull the microphone like right here. But yeah, so it's Binance is doing some crazy shit. And then over the weekend that we saw that they were having tons of problems with withdrawals, right? They had closed as a total of 3 times. They closed withdrawals for BTC. They said it was network congestion on their end, but again, we saw over 400,000 BTC transactions that were being pending for the longest. They eventually started going through, but that's a huge number of transactions that are pending. And Binance kept on saying, don't worry, all your funds are safe. But when you think that you can't really withdraw anything, you're kind of given only a few options. You can either buy or you can sell. And that's almost similar to what Robinhood did when they had the GameStop stock. They took away the buy option. So the only thing people could really do is sell, right? And sure, it was temporarily, but where's the price right now? Where's the volume at? Are we overbought or are we oversold? Pretty overbought. And we saw today that there was a dump. And we were looking at some of the exchanges. It was like the price of Bitcoin on Binance was a lot higher than it was on KuCoin or it was on Coinbase. Like, it was a pretty good, it was like $400 difference. I consider that pretty big, especially if you're, a whale and you got 100, 200 Bitcoin in your exchange. But the fact that you couldn't move your money out of there just proved that it's also, you're not in your possession. It's kind of just a number on a screen. And it's just insane that it happened 3 times in one day. Now they're, obviously integrating.
Well, did you see the stuff with like the BRC20 token and how they're like basically making, meme coins on Bitcoin?
I did see that. It was kind of wild.
So that's also a part of the congestion as well, right? And that was, we've seen that with Bitcoin. Ethereum has been crazy. Transaction fees are awful. Like, can this meme coin meta just be done with so that I can go back to transacting for, I can't even do anything. I'm not going to pay $30 for a transaction. You out of your mind? Like, that's crazy.
Yeah. I mean, it's absolutely insane where we are right now. Last thing I will say about Binance is we were for the past 4 or 5 months, BUSD has been their stable coin, right? SEC said no, Paxos, you can't mint anymore. So then there's a limited supply of BUSD. I think they artificially pushed the price of Bitcoin up to where we are. That's why we're seeing tons of fair value gaps between 19K all the way up to 31K. And what they're doing is most likely selling their supply into, True USD. You and I were talking about True USD. Out of nowhere, this just became Binance's stable coin. And obviously, I think that's been their play. They pushed the market up. And now we're seeing at a point where you can't withdraw anything and it's just offering tons of supply. It's like propping the price up. Is this their play? I have no idea. It's totally legal to buy, obviously, as an exchange and push the price up. But is it shady? Yes, absolutely. And again, since they do have perp swaps on their website, on their trading platform, they kind of know where everyone's positions are, so they can push the price to liquidate people if they really wanted to. So it's definitely a thing where I'm not going to say that Binance is doing illegal shit. It's definitely shady, but best thing to do, make sure that you have self-custody and just don't be married to one exchange. Obviously, trust no one, no false idols. I don't care where you are. Just be careful with your money right now because anything can happen. And we saw FTX, Sam Bankman-Fried say, everything is fine. Don't worry. Funds are safe. Binance keeps on throwing that number 4 out there and saying everything's cool. So that's all I got to say about Binance. Nothing else for us today. I think we'll look at some of the charts the next few days.
Sounds good to me. That will wrap it up for today's show. Good start to the week. Tomorrow we'll be discussing how to position yourself defensively heading into what we believe we are in a recession. Could, as we get numbers adjusted or if we get closer to one later this year. Wednesday, talking about some crypto tokens that we want to be positioning ourselves heading into the next bull run, whenever that's going to be at any time soon. Thursday, we're going to do a similar thing, but with stocks. And then Friday, we have our weekly wrap up. So big week of shows. Very excited for everything that's going on. This is a huge opportunity in the markets. We want to make the most of it. We want to help you make the most of it. So please, if you have not, hit that like button for us. Subscribe to our channel. Drop a comment. share us out with anyone who you think would enjoy our stuff. We appreciate all of that. Kevin, all good? Any final thoughts before we hit the road?
No. Follow us on Twitter for any updates. Obviously, I'll post some chart stuff like that. So, our names are right there on the screen. Other than that,
yeah, give Kevin a follow on Twitter. He posts some great stuff. He doesn't have enough followers that it doesn't make any sense to me, but it's probably because he's not a moon boy, and so that's not sexy enough. Sorry, buddy.
maybe I'll just start showing my ass. I'll be that type of moon boy. Just kidding.
Oh,
Just
okay.
kidding.
Well, on that note, we're gonna wrap it up for today. Thank you everyone for watching. We will see you tomorrow.
Take care, everyone.
Don't show your ass, Kevin.
Plan not to. OnlyFans.